All right, guys. Josh Reilly here with Crystal Coast Realty, following up on another video. This time we're accompanied by Jason Holland with Movement Mortgage.
Hi, guys.
I just want to thank you for taking the time to join me this morning on a video. It is Friday the 3rd, April 3rd. And yeah, introduce yourself, man, and thank you so much for joining me.
Yeah, thanks for having me, Josh. Hey, guys, I'm Jason Holland with Movement Mortgage, located at 309 Mangrove Drive here in Rhode Island. Thanks for having me on, and I look forward to answering your questions, Josh, talking back and forth with you.
Awesome. Jason, thanks. Listen, let's get right into it. Again, these videos are supposed to be kind of short and sweet, but wanted to be informative too for those in our local area. We know we have a lot of real estate companies as well as military and people, wondering, some of the questions we're going to be going over to hopefully help them through this time with this whole virus. Let's look at the first one that we kind of were discussing previously, kind of before we started this video. But let's talk about mortgage payment forbearance. Obviously, we know that's all a popular topic right now. So what can you tell me about that?
Right. A lot of mortgage companies are reaching out, and they have, little tickers or banners on their, websites about, the coronavirus, pandemic and what they can do, what options you have. And mortgage forbearance, I see, is a popular topic, and I see a lot of discussion in the comment sections on social media posts, things like that. Mortgage forbearance is one option that you have if you're having trouble making your mortgage payment. The most common misconception I see now is that they're giving a lot of mortgage lenders or servicers are offering 3 months of mortgage forbearance, and the initial thought or the initial assumption a lot of the time is that we get to skip 3 payments, and those 3 payments are either just kind of forgotten about, or they go to the tail end of the loan, which is absolutely not the case. In a situation with mortgage forbearance, if you apply for the forbearance and it's approved, let's just say the April 1st payment is due and you're approved for mortgage forbearance, you get to skip April, May, and June. Those are your 3 months forbearance payments. The catch is, not a catch, it's just kind of the way that it is, come July, the July payment is due, and all 3 of those payments that you were allowed to skip are due at once. So if you're having trouble making your mortgage payment this month, if your April payment's due and you can't do it, you apply for forbearance, you're not going to make a payment April, May, and June, but in July, you're going to have 4 payments due.
Wow.
Huge chunk. So a lot of people don't realize that, and a lot of people, when they're calling, they're getting disappointed. Thankfully, before they do it, if you got a $1,000 mortgage payment, you're having trouble making that, 3 months from now, you've got $4,000 due. Unless you've got some really firm commitment on some money coming in, the money's going to be there to pay it, it could cause you a lot of problems when all those payments come due, because then you could be looking at foreclosure proceedings, having to rework the loan. You're already in a bad situation that could get worse for you really, really quickly. So forbearance is one option, but enter into it very cautiously and make sure that you read all the fine print and all the terms of that option if your mortgage servicer is offering you that.
Awesome, Jason, that's huge. I myself was slightly confused as to how that may have worked. I appreciate you explaining that in detail. Let's talk about the next thing. Let's talk about what are the options out there for someone interested in possibly lowering their payment or saving some money. We know right now times are tough, and everybody's kind of looking for that way to cut the edge and maybe save a couple dollars. What's your thoughts on that?
It's still a great time to refinance, Josh. Rates are still at historic lows. They're not where they were, say, about 3-4 weeks ago when the Fed was buying up a bunch of mortgage-backed securities that drove the rates to pretty much the lowest they've ever been. Relatively speaking, they're still at historic lows. They're going to go down again. They're going to have another dip. With everything that's going on right now, we're going to go deeper into a recession. It's going to be really interesting to see how things play out in the next 3 to 6, maybe even 9 months. When the economy suffers like that, one of the first things that happens to stimulate the economy is rates go back down, to get people borrowing and things like that. So they're going to go back down again. Even though, like I said, they're still, historically low right now. There's a lot of opportunity for clients to refinance their house, lower their interest rate, lower their monthly payment. And when you close on a house, depending on the time of the month that you close, you're going to skip that next month's payment. Let's say you close, the 15th of April, you're going to pay some interim interest through the month of April. You're not going to make a May payment, and then June would be the first payment due. So you're technically going to be able to skip that month. That's going to help. And then when the payments do start back up, If you've structured that refinance properly, you're going to have a lower monthly payment, which is going to help your monthly cash flow situation.
Gotcha. That makes total sense. All right. Well, hey, let's
Another
look at
thing, one more thing.
Sure.
Hey, Josh, one more thing to piggyback on that refinance option. Depending on your equity situation, there's another opportunity. You have a couple of different types of refinance. You have a rate term refinance where you're just refinancing the loan, a limited cash out refinance where you can get up to $2,000 back, and then there's a cash out refinance. So depending on the equity situation in your home, not only could you lower your monthly payment on your mortgage, if you're in a great equity position, we have the potential to take some cash out, pay off some student loans, pay off some credit cards, pay off some high interest stuff. You might save $100, $200 on the mortgage, but if you can eliminate, $400, $500, $600, $700, $800 on, credit cards and loans and student loans, things like that, the opportunity to improve your monthly cash flow position is definitely there. So that's another option that I would explore with every client that's interested in refinancing. We're just going to do the mortgage, or do we have the opportunity to eliminate some higher interest debt and improve that situation even more?
Yeah, that's a great point. I wasn't even thinking down those lines, and that's for sure a way to kind of cut down and save some money in these times where every dollar counts for sure. All right, well let's go into the brass tacks of it all. Is it a good time to buy or refinance? What are the rates doing? How can we prepare? How should we prepare during this time of uncertainty?
Great question. It is still a very good time to buy a house, and there's lots of reasons to buy a house. Sell a house. Job changes, family size changes, relocations. I think around June, July, the military PCS orders are going to pick back up and start processing. I work with a lot of VA clients that are PCSing in and out of North Carolina, excuse me, Carteret County. Great time to purchase a house. The real estate market is still very hot. Thankfully, like the mortgage lenders, you guys are able to work remotely, do virtual showings, get everything kind of done up front without having to get out of the house. Kind of narrow down your search criteria, get everything where it's supposed to be. Same thing with the refinance. Rates are still, like I said, historically low. The best thing that a consumer can do to position themselves right now, while they have this quote unquote downtime, they're working from home, or their job has been suspended or something like that, use that time to get prepared. What we saw about a month ago when the rates dipped to as low as they've ever been, everybody's coming in, everybody's buying a house, or everybody's refinancing a house, and the gates were literally flooded. I mean, it was a huge bottleneck. A lot of lenders slowed their application time. A lot of lenders slowed their turn time. Some lenders even suspended taking any applications because they simply couldn't handle the inflow of business. Movement's ops team have been working remotely for probably the last 3 to 4 weeks. They sent everybody home with a laptop, printer, scanner, basically the ability to do everything they do in the office from their house. So we are still very, very well positioned to do what we do on a normal basis. We're just doing it from the kitchen table or the home office, so to speak. The best thing that the consumer can do right now, get prepared. Don't wait for that next rate drop to apply for a mortgage or to start the process. Go ahead and reach out to a trusted lender, get an application on file with them. Lender's going to talk with you. We're going to talk about your situation, what you're trying to accomplish, what your goals are. Going to go ahead and give you a list of documents to start, gathering as far as pay stubs, W-2s, bank statements, and all that kind of stuff. Go ahead and build that file so that when it does turn back on again, those rates do that next little dip that we pretty much know they're going to do, we are not pulling the trigger then. We're already 4 or 5 steps ahead of the game at that point. That's going to ensure that when the rate desk is so flooded that the system crashes, we've already got our rate lock in place. We've already got our position in line with the underwriters. We're ready. We prepared. If you wait until the dip, and then you and everybody else is trying to get into the parking lot at the same time, you're going to run into the same situation. So use this idle time that you may have. Do the same thing we do. Work remotely. Everything you have as far as pay stubs, bank statements, W-2s, tax returns, all that stuff is pretty readily accessible online. So, gather that stuff, speak with a lender, go ahead and build that package now so that you're best prepared when it's time.
Jason, that sounds great, man. Hey, again, appreciate you taking the time. I know you're a busy person. We're all kind of trying to stay busy, and it sounds like you're swamped with kind of everybody in the making these changes or trying to explore options to save some money. And I really do appreciate you taking, a couple moments this morning to kind of explain some of the questions that I know are looming out there for not just myself, but a lot of other people, whether it be my neighbors, friends, or locals here in the area. So I want to definitely take the time to thank you again for taking the time to talk to me, and look forward to hopefully seeing you on the next transaction.
Absolutely, and an open invitation to anybody, my realtor partners, the general public, anybody, if they want to give me a call, if they want to just do an informational call, you don't have to fill out a mortgage application to pick my brain about what's going on now. Have a little informational chat about your current situation, and maybe just to start to outline a plan of action, and get the answers you're looking for. I'll welcome a call at any time.
Good deal, Jason. Good deal. Hey, well, listen, stay safe, stay healthy, and definitely look forward to talking to you soon.
Sounds good. Thanks for having me, Josh. Be well.
Yes, sir.